Hello and welcome to the stock markets analysis. Now today we'll start by analyzing the SPY. We'll be taking a look at the US market and the various ETF and indexes, but we'll start with the SPY. Now the SPY is actually an ETF that represents the S&P 500. Right now it is above the daily 20 MA. This red color line. It is also above the rising 50 MA, and it is also above the rising 200-day moving average. So this is a daily chart of the SPY. Since it's above the 3 of this rising moving average, it tells us that the SPY is bullish in the short term, in the mid term, and the long term. And recently it broke out of a large daily ascending triangle. And if you take the height of this triangle, draw it here, and then we create a parallel line. Clone. Okay, and we project it upwards. Actually, the possible target in the midterm is about 3, 2, 1. Now I'm not sure whether it will reach there or not, but from the looks of it, as long as it stays above the rising daily 220 MA, there's a possibility that it might reach there. Maybe it might go up a bit, drop, and go up a bit and drop, and then only it reaches there. But it does give us a possible target. Let us now look at the 60-minute chart. Just remove this drawing here first. Now the SPY in the 60-minute chart is in an uptrend. Even without using the moving average, we can see that it's making higher highs, higher lows, higher highs. It dropped higher low, and then higher highs, higher low, and you get the idea. It's moving up, and you can see that it is trading above the rising 60-minute 50 MA and also the rising 60-minute 200 MA. This is a picture of strength. Whenever you see a index or stock that is trading above the rising 60-minute 50 MA and 200 MA, it tells us there's a possibility that it's going to move up in the short term to mid term, and which is why you see after the breakout the SPY continue to move up, move up, move up, and move up. Now this defies logic, to many people, but when it comes to the stock market, right, if you have a method to follow, a trend following method, a simple one, it usually tells you how the market will do. And a very simple way is to use the moving averages. If it's rising, especially the 50 MA and the 200 MA, then odds are it's going to continue to move up. Now, at this moment, what is happening here is last week the SPY dropped to an area of support. This is an area of support, this congestion area. It dropped to an area of support, and then it formed a kind of ascending triangle. And it broke out of the ascending triangle at a support area. So when you have a pattern, a continuation pattern, or a reversal pattern that happens in a support area, the odds of it moving high when it breaks out of the pattern is very good. And SPY broke out of this ascending triangle and it went up all the way. Now, right now, since it's still trading above the 60-minute 20 MA, our bias is still bullish. You can be bullish bias as long as the SPY is trading above the 60-minute 20 MA. Now let's look at the 15-minute chart of the SPY. As you can see, it is trading above the 15-minute 20 MA, 15-minute 50 MA, and 15-minute 200 MA. This is a picture of strength. When you see a stock and index that's trading above all three moving average, the odds of it going higher are actually very, very good. Now, I will continue to be bullish as long as SPY stays above the 15-minute 50 MA. You see, once it broke out of this ascending triangle, there's a bullish cross here where the 15-minute 20 MA cross above the 15-minute 50 MA, and then it broke out of a ascending triangle. Most of the time, actually all of the time, it stayed above the 15-minute 50 MA, and right now I like to just use it as a trend following tool. So as long as SPY stays above this 15-minute 50 MA, let's continue to be bullish. There's no sign of reversal yet in the SPY chart, so we should continue to maintain a bullish bias until it falls below this 50 MA. Now, if you are looking at the SPY, it's actually a good idea to look at the S&P 500 futures. So let's go to the S&P 500 futures, and usually what I like to do is go to the hourly chart, because it can give us a clear picture of the short-term movement of where the US market wants to go. The S&P 500 is represents the US stock market, and if the S&P 500 goes up, 75% of the stocks in the market will tend to follow the direction of the S&P 500. So the other day in my analysis in my website, I pointed out that there's a possibility that the S&P 500 may find support at this 60-minute 200 MA, this yellow line here, and indeed it found support at this area. And then what is beautiful about it is it formed an ascending triangle in the 60-minute chart. You can see it making a higher low, and then you connect the lows, and then a relatively flat high here. You just connect it, and you have a very beautiful 60-minute ascending triangle finding support at the 60-minute 200 MA, and then you have bullish cross of the 20 MA crossing above the 50 MA, and boom, it went up, broke out of the ascending triangle. It more than met its target. You can take a target here, the height of the pattern. Let me just clone it, and then it has already met its target, and after it met the target, it corrected a bit. But you see, because it is trading above the 60-minute 50 MA and the rising 60-minute 200 MA, there was a bullish bias, and the market continued to go up and up. So right now, what we can do is I think it has also met a measured move. This measured move here, clone it, and then we project upwards from the correction down here and project upwards. It has actually met the measured move target, and then it collapsed. So right now, I would say that the S&P 500 is a bit extended, and there is a possibility that there might be a correction if it drops below this 60-minute 50 MA. This is a support area. Let me just draw a rectangle here. There's a support area here, because there's a lot of price congestion here and the previous high here. So this is actually a support area. Now right now I do not know whether it's topping out or trading sideways, but as long as it stays within this range and above the 60-minute 50 MA, then I just treat it as resting. There could be a head and shoulders top here, but I don't want to jump into conclusions yet. We just let the market tell us what it wants to do. But right now it has not tell me it wants to reverse. It's just that momentum is slowing down. It has met its targets, and it's just pausing and resting. So as long as it stays within this area and it does not drop within the 60-minute 50 MA, then we continue to treat it as a pause that refreshes, that maybe will break up higher in the future. Let's take a look at the DIA, which is the ETF for the Dow. Right now it has also I think kind of met its measured move target. This is a 60-minute chart of the DIA. You can draw the move up here, and then we clone it. And yes, actually it has already met its measured move target. Anything above that is bonus. And the support area for you to watch right now for the DIA is this area, the previous high here. So as long as it stays above this area, then we continue to remain bullish. And as long as it stays above this 16-minute 20 MA, we continue to remain bullish on the DIA as well. Let's take a look at the Q. The Q is also in an uptrend. As you can see, it is above the rising 50 MA, 60-minute 50 MA most of the time, and the rising 200 MA tells us that we should continue to maintain a bullish bias. Sure, there will be corrections, small corrections here and there, but the overall picture it tells us to is remain bullish bias, and any dips or continuation patterns are actually buyable. For example, let me show you. There is a kind of triangle pattern here, if you can see it. So when the QQQ is above the rising 50 MA and 200 MA, there's a continued pattern here. It broke out of this triangle. It's actually a buy signal, and traders can buy here and put a stop here and write it up. And even dips are buyable. For example, there's a break above a 60-minute downtrend line at support area. This is whole congestion areas are actually support areas. This congestion area is a support area. When the QQQ drop to the support area and then break above a 60-minute downtrend line, actually this is a buy signal. Some traders will take it, some will of course they play certain patterns, but for our purpose of analysis, if the Q drops below the 60 drops to a support area and then goes back above the 60-minute downtrend line, it's a continuation pattern. Right now the Q is still above the 60-minute 20 MA, and therefore we should have a bullish bias and remain bullish on the Qs. Anything else to look out for? Okay, if you look at the US market, you should also look at the tech sector, because if the tech sector leads the market, if the tech sector moves ahead of the market, usually it tells us that the entire market has a bullish bias as well, because the tech sector usually leads the market. Look at how the XLK is doing. It is above the rising 60-minute 50 MA most of the time, and above the rising 60-minute 200 MA most of the time. It's rising, it's sloping upwards. So what it tells us is have a bullish bias. Have a bullish bias. Continue continuation patterns, breakouts, and dips are usually buyable. For example, here, I think I made an analysis on it some time ago on my website, an XLK. I can't remember, but I think I did. It's a triangle here, 60-minute triangle. You can see it broke above the pattern and then it shot up all the way. And there's also, just like the Qs, you can actually draw this congestion or consolidation support, and the XLK get up above this downtrend line. It broke above the 60-minute downtrend line, which happened at support, and this is actually a continuation pattern. So right now, as long as the XLK stays above this previous high and above the 60-minute 20 MA, we should continue to have bullish bias. I think if you draw a measured move, it has met its measured move target. Clone it and we draw this measured move target. Yes, it's actually more, it has met its measured move target. I don't know whether it will correct or not. If the stock or sector has met its measured move target, then we should, anything that is more than that is a bonus. So I hope this analysis helps you. If you find it helpful, please press the like button and subscribe to this channel, and I'll see you in the next one.